Hello, everyone. Welcome to another Trading Tuesday. We are so excited to have you with us. We have the team from the New Money crew with us today, Nathan and Graham. Great to have you back for another show today, talking about some of the top trades of the week and also some things you want to watch that could really move the market, especially for people who are trading every day. So I think that's where we should start today. We just had a MarketBeat Monday on yesterday where we talked about more kind of long-term investors, things to look at right now, but you guys are in the market every day talking about trades. So what are you watching this week specifically?
Yeah, it's interesting week. I think it's kind of a holding our breath week for what happens next with Fed rates, and we'll talk about in a second. The September rate cuts have been very interesting and timely catalyst in the past. Graham did some great research on that I think he can share here in a couple of minutes. They've consistently triggered some very interesting melt ups in the market, and so a little bit of just kind of hold your breath right now in the market, kind of seeing what's going on. We're seeing some divergence across the different sectors. One thing that I've been trading more actively is the Qs and just kind of putting myself in premium collection position. So that's like on Friday, we put a trade together on the QQQ, where if it moved up 0.2% or down 0.5%, we would win on either side of the trade. So stuff like that, where I'm not trying to get too specific on exactly what stock is going to move or be directional, but just kind of give myself a little bit more room for error in the market this week as we're a little bit in no man's lane waiting for that cut rate.
Yeah, Graham, if you want to walk through some of the September data that you've seen, I know we talked the last couple of weeks about that September slowdown. Are we seeing that yet, or is there maybe this month going to be a little bit different than what we typically see in September?
Yeah, we have not really seen that yet. I mean, overall, we've seen a slowing of momentum, but we've still seen the markets pushing at all-time highs every other, random day. It seems like we make a new all-time high, but it's not at the same trajectory as what we saw, in May, June, and July, where they were kind of going at this angle. Now it's really flattened out a lot more. So we'll see if we do get that September pullback that I've been anticipating, the one I've been looking for. Right now, I mean, it's seasonally, yeah, September's down. That doesn't mean it's necessarily going to happen again, but I'm very, very interested. We have PPI tomorrow, CPI on Thursday, and next week, the Fed interest rate decision. I would not be shocked if that's a sell the news sort of event. It's completely priced in that the Fed is going to cut the rates by a quarter point. I would not be shocked if we get a quarter point cut and the market sell off with that news.
Very interesting. Are there any of these slides you guys want to go through for September too?
Graham, why don't you just walk them through kind of the trigger point over the last handful of unique situations where, interest rates were high, then they started cutting, inflation was there, and what happened? Because Graham and I, Bridget, we rarely agree exactly. We were joking about this with our members. We're normally somewhat on the same page, but we have a little bit of a different approach or different time horizon. I think we're both pretty aggressively thinking that Q4 could be kind of a melt-up market where we get a big move in spite of the fact that the economic numbers continue to be subpar, but at the same time, the top companies are making record profits. You kind of have this weird divergence in the economy. And so we both kind of think Q4 sets up for one of those nonsensical, squeeze up. And Graham put together some data on actually September rate cuts historically have been a great trigger for exactly that to happen.
Yeah. So we're seeing the jobs market slow down, the economic reports showing the economy slowing down, and a lot of recessionary fear headlines starting to make their way back up the old Google search. But like I told folks in our opening playbook sessions, typically these reports come 1 to 2 years before a real recession hits. So while some people are fearful of a recession, I'm personally at this moment not. I would like to see that September pullback. I would like a better buying opportunity, but I think we are about to see a pretty awesome market melt up. Bridget, if you don't mind going down to slide 9, and we'll kind of fly through these slides from there. It's a visual representation of what's happened in the past and what could happen in the future. So again, will we have a recession? Maybe, but not yet, in my opinion. September 17th, that's next week, Wednesday, we have the Fed meeting, the Fed interest rate decision. I wanted to show you guys here what does the S&P 500 typically do in rate cutting environments. So in September of 1974, it was a stagflation period, very similar to kind of what we're seeing right now with inflation higher than usual. We're having rate hikes, cut, flat, and then potential cuts again. Well, in September 1974, the rate cut cycle started for the Fed. Well, what came next from there? Over the next year, the S&P 500 gained 30% over the next 12 months. And keep in mind, that was still while the economy was still in a general recession. If you keep going, fast forward 10 years, funny enough, also in September of 1984, the rate cut cycle began again. What happened in the markets? About 11% gain in the S&P over the next 12 months. So we just want to follow the money and see what the money tells us. Let's keep going. Let's look at 1995. September 1995, also right at the beginning of another rate cut cycle. Well, what happened over the next year? Over the next year, the S&P 500 gained 23%. And I tried to highlight specifically September for you guys so you can see how shockingly it all lines up right now. We'll keep going. We'll do one more. Let's look at September of 1998. Now, this September was right at the very start of this rate cut cycle. This was right in the heart of the dot-com boom, very similar to where we are right now with the AI boom. And what happened over the next year? Over the next year, the S&P 500 gained 20%. So I think that's sort of where we are right now. The rate cuts are going to be a short-term catalyst, not just for the markets, but overall spending, small caps, all sorts of different assets where I think we could see a real melt up here over the coming 12 months where the S&P 500 very reasonably could move 15 to 20% from here. NASDAQ probably 30, maybe even 40%. And we'll cover some stocks that we think stand to benefit the most here in just a moment.
I think it's just important to talk about this as such great examples of why this September could be different. Because again, I think every investor out there, if you've been doing this for a while, you've been hearing September slowdown. The market is historically gets to its lows kind of the end of September, early October. That's something a lot of investors have been preparing for. But these rate cuts could make all the difference, right? Is that that's kind of like a summary of what you just talked about? Is it because that rate cut is coming that we could see something different?
Yeah, it's just a matter of the money supply and what the money's doing. That just creates its financial or quantitative easing, if you will, for the market. It's just going to be a catalyst for continued growth. Obviously, we'll talk about small caps here in just a minute. We've seen small caps really pick up speed lately, and I think that will continue because if you think about it, the smaller companies, they don't have a ton of cash on hand. So they have to take loans, they have to take on debt, and when interest rates are really high, that's not so good for them. But as interest rates come down, they're really able to benefit from that.
Yeah, and one thing that I would say, Bridget, is I think if you get this kind of melt-up situation where rates come down, people are pricing in aggressive upside, I personally think it's going to happen at the top and the bottom of the market. So I think your Mag 7, the companies that implement the most AI and cook their books with margins, I don't mean illegally, I mean just they are able to fire 100,000 employees and optimize everything they do and continue to make record profits. Your NVIDIAs of the world, your Metas of the world, your Googles of the world, I think are going to make just substantial record profits, even if the regular economy feels unhealthy. And then like Graham said, on the flip side, I think you're going to get a lot of smaller cap that just ride that wave of excitement. So I personally think if we get that melt up, which of course is a big if, but I think Graham and I are both playing it pretty aggressively, you're going to see the top end, the biggest, most impressive companies shoot up and squeeze higher. And then you're going to see more of the bottom end flyers. And I think your middle of the road companies are going to be where the least impact and the least value is. An example of that would be that 1998 to 2000 run up, incredible run up in the NASDAQ. I mean, if you just go look at what the charts did from that time span, it's pretty wild. But what a lot of people don't realize is that a lot of your kind of middle of the road, even what people call blue chip stocks, were break even or even lost a little bit in that same time span. So it was really just the tip of the spear companies that went ballistic that pulled everything else up with it.
That's a really good point of looking back at history, looking at which ones were successful during those times. So a good way to look at it. Let's talk about right now. If you're in the market now, we see this potential rate cut coming just about a week, 2 weeks away. What are the sectors that you're looking at for some of those big moves? What are those top tier sectors right now where you think we could see some of those biggest moves happen?
Well, Graham, I'll start with a boring one, and then I'll let you get to the more exciting ones because I know you have a basket there. But sorry for those of you in the chat. This is a boring one, but I think gold is positioned really well right now. I know a lot of people don't like to buy and hold gold, but you can actually play GLD with options, and I think do really well right now. The reason that gold is such a good opportunity in my mind is number one, it is a lot more tradable than people realize. You can trade GLD through any regular brokerage account. You can trade options. It has a lot of upside potential. But actually, it is one of the rare assets that does incredibly well in these rate cut cycles, that has, blow off top potential. It could go up. Historic rate cuts, it's gone up 300%, 500%. People don't realize gold has been meteoric. But also, if we get the opposite and we just get a lot of fear and risk off in the market, gold should also do well. So I would actually say gold, again, kind of a boring pick, but probably the best win-win asset right now in the market. And I traded pretty aggressively with just using GLD in any regular brokerage account.
Yeah, and we've got a whole million other slides on gold and why we are very, very convinced gold is going to have a pretty awesome next year, maybe 2 years coming up. We actually took a trade on gold last week in the opening playbook, up about 80% week over week. And it was a conservative play. So really, really excited about gold too.
Very good.
Sorry.
Before you get on to the next one, I wanted to share, if you're new to Trading Tuesday, you haven't been here before, we talk about some of the biggest trades of the week, but Graham and Nate and Lance are all on the new Money Crew, and they are live literally every day, twice a day, going over like daily trades like this. So if you are looking to join them more for more of those specific plays on gold, these playbooks that they're talking about, they do those live every day at 10 a.m. Eastern and 3:30 Eastern. So if you scan this QR code here or click a link we have, you can get into their live stream. It's totally free, and join them every single day for those specific daily trades. So if you're a trader, I think this is a really good place to be, and you'll hear even more stuff like this with them on their show twice a day, every day. I don't know how you guys do it that much. That's a lot to go live. So good for you guys. But let's move on to that next trade that you want to talk about, Graham.
Yeah, if you don't mind jumping down to slide 30 here in the chart. Two things I want to show you guys, and then what we're going to do is give you an AI basket, a pretty standard one that's going to be our most powerhouse stocks of the AI basket, and then I'm going to give you a more speculative one. But what we're seeing here on this slide is that blue line shows the dot-com boom. What did the S&P 500 do during the dot-com boom? Well, that's that chart you see on the left, that blue line. On the right, you see that same chart for the NASDAQ. Now, you may notice there's a red dashed line there too. That is overlapping where we currently are in the S&P 500 and where we currently are in the NASDAQ. And to me, it's very shocking that obviously history doesn't always repeat itself to a T, but it often rhymes. And we're seeing that happen right now with this AI boom, where it's almost exactly mimicking what happened in the late 90s. Now, my point is, what you can see here is that blue area that has not been covered by that red line yet. That's what could be to come. There's still a lot of upside opportunity here, especially if you look at the NASDAQ. Look at that late 1999 run. It almost went straight up. The NASDAQ doubled during that time. Now, to be clear, I don't expect the NASDAQ to double. Could it? It could. But if you flip down to that next slide, Bridget, I will show you here. A lot of people think we may be at the peak of the boom, and they're trying to call it, and they're just going to be waiting and waiting and waiting. That's my opinion. If we look at the price to earnings ratio of the biggest stocks in the S&P 500, this chart on the left shows what happened at the peak of the dot-com boom. It was a 41x average PE. Currently, of the S&P 500 stocks, the highest weighted ones, we're only at 31x. So that still means we have about a third of a room, about 30% upside here if you want to compare the PE apples to apples. So for my top ways to play it, right now I would definitely be building an AI basket. These are the stocks that are going to benefit the most. That's our major catalyst right now. That's the big reasons why stocks reversed immediately after the bear market. The release of ChatGPT, Microsoft got involved, Nvidia started making buku bucks, and these stocks are going to continue to benefit. So for my AI basket for this final 1 year melt up, it could be a little longer, but I'm just going to call it 1 year for simplicity's sake. I really like these 6 stocks, and these are my safer AI picks, if you will. Meta, Google, Nvidia, which you probably already own or traded those in the past. 3 other ones to be invested in are ANET, GEV. ANET's a data supplier. GEV is an energy company. We're going to see energy continue to boom. And CRWD, that's CrowdStrike, which is cybersecurity, which will obviously continue to grow as this AI continues to evolve. So that's my core AI basket. Now, if you want to have some fun and go a little bit more speculative, I also put together a 6 stock speculative basket. And one of these is a stock that we gave here maybe 2 weeks ago, and it's almost doubled since then. Iron. But this is a more speculative one. So this one's going to have bigger swings, but also legitimate opportunity to see the stocks double, maybe even more than that. So very, very high upside. But with that comes risk. So just know that when taking these picks. But this is my more speculative. If we get a melt up, I would not be shocked to see some of these tickers double. IREN, STX, VRT, AVGO, which you probably should know. I think that's in a very, very strong breakout right now. Obviously smashed earnings, trying to catch up to big brother NVIDIA right now. Oklo is one that we bought in the opening playbook at $8. It's over $70 now. Still room to run on that one. And then Tesla, which might shock you on this list, but Tesla with not just AI, not just EV, but also their robotics play, I think we could legitimately see Tesla stock double here over the next year if we do get this crazy melt up.
Yeah, and Elon has to get it to do a lot more than double to cash in on his package.
He's incentivized.
Yeah. I do want to bring up another stock that's kind of in that speculative plays that you talked about. It ran up so much last night. We have to talk about it. This is something, Lance is part of your new money crew. You guys do all of this daily trading stuff together. And Nebius Group went crazy last night. Somebody just mentioned it in the chat, just looking at that big jump up, almost a 40% jump.
46%. Yeah.
Yeah. In 5 days is crazy. Talk about this one. Does this fall into that speculative category a little bit?
I would say it definitely does. Any of these smaller stocks that are inking deals with big mega cap companies, you're going to see them rocket. I mean,
yeah, I think obviously if you could write your own ticket, you'd try to find some that haven't inked the deal yet, right? And then you'd wait for those, but a lot easier said than done. One of the things I was mentioning in our closing playbook session yesterday was I think people's gut reaction to stocks like NBIS or Hood or these other ones. The retail gut reaction is typically, oh, wow, it's way overextended. We should sell it now. It's going to come back down. But you have to be super careful with that because a lot of times these melt up phases or these overexcitement phases can last a lot longer than people realize. And so retail traders actually often lose a ton of money trying to short stocks or buy puts or things on that melt up phase because one of two things happens. Number one, it actually just keeps going and it kind of melts the stop losses of those people, or, before it ever comes back down to earth. Or number two, it just goes sideways. And so you get these big runs up, volatility is high, everyone's buying calls, everyone's buying puts, and the market just kind of slows down and eats all of that option premium that people have on both sides. So I think you have to be very, very careful and actually even more careful on the short side. Hood is a good example. It's down a couple percent today, but I think if we get the kind of squeeze we're talking about, Hood could still double from here in the next year, and it wouldn't even shock me. So just a word to the wise there. Be careful when a stock looks like it's just way overextended. It has to go back down. Not so fast. It doesn't have to go back down.
Yeah, that's a really good warning and a good point for investors to think about, Nate. Another question we have in the chat today, which I think is a good question to talk about with you guys specifically, is why are we seeing so much movement on stocks overnight, more so during the day? Is that a common thing? Are we seeing that now more than usual? Talk about that just a little bit.
Yeah, well, Graham's smiling because he knows the overnight trading is kind of my one of my big flagship things. So it's not new, actually. If you go back and look at the last 30 years, one of the most shocking data points you'll ever find is that the S&P, if you owned it from 9 a.m. or 9:30 a.m. to 4 p.m., so you owned it for every second of the trading day, the S&P for the last 30 years, you basically would have made zero money. Most people have no idea, but the S&P has actually gained almost no ground during the trading day, even if you owned it every day for every trading day for about 30 years. All of its movement actually happens overnight. So this is not a new phenomenon. People often don't realize it, but most of the movement, in fact, basically all of the movement for the last 30 years happens overnight in the stock market. So I have a whole service that I do this. All I do is take a trade every day to try to capitalize on that overnight movement. We do it at 3:30 p.m. We look to get out the next morning. And the entire idea is exactly what that very smart person just pointed out, that the movement is happening overnight, not actually during the day. During the day looks like a lot of movement is happening because it's bouncing up and down. But if you actually zoom out and look at it, it's doing a whole lot of nothing.
That's really interesting. And again, another really good tip. If you are on this channel, you might be more of that like retail investor who's just buying and holding a lot of stocks. And that's why we wanted to bring these guys on who are the experts in day trading and are making moves every single day. So thank you for that great tip, Nate. It's great info for our viewers. Might be new for them. I want to talk a little bit more about some specific trades. I want to make sure we do that on these Trading Tuesdays. If you're new to trading, you've not done this before, what is a specific play you would make on some of those stocks that we mentioned? So whether it's those bigger names or those speculative names, do you have a specific example of a trade that you would make this week?
Yeah, so let me start with a little bit longer term one. Obviously, I would take it this week, but one that you could, try to capitalize on the Tesla play that Graham gave. And so all you would do is you would buy a spread for the all-time highs of Tesla. So if you go to the chart and you look at Tesla, you say, okay, what are the odds that Tesla is going to make all-time highs, especially with this package that Elon has and all of that kind of stuff? Tesla would have to go over $488 a share in order to make all-time highs. And then you ask the second question, okay, how long would it take to do? Would it take 3 months, 6 months, a year, whatever the case might be? Well, I would say I would feel fairly confident that in the next year or year and a half, Tesla can make all-time highs. And so if you go down and you just play, okay, let me give it all the time it needs and go to December of 2026. That's over a year for Tesla. And you buy the spread, which would be, again, going for all-time highs. It'd be basically trading the 480 or 490, whichever one you wanted. I'll go look at it right now in real time just to give you an actual price here. Okay, so you could buy the December 18th, 2026. That's, 15 months away. 480 call. At the same time, sell the 490 call. That's what we call a debit spread. All you're doing is saying, can price get up to those all-time high levels? Well, the cool thing about that spread is that it would cost you about $1.90 to buy. But the max value of that spread is $10. And what you're doing is you're making a binary bet. Does Tesla get up over 490 by December of 2026 or not? If it doesn't, you'll lose $1.90, $190 per contract. But if it does, you'll make $880 or $820 per contract. So what you're basically doing is making a 400% ROI on what I think is more like a 50-50 bet. Like if I ask people in the chat, do you think Tesla will reach all-time highs in the next year and change with the comp package, the robots, everything? I would imagine you get something like a 50-50 response. 50% of people say, yeah, Tesla will make all-time highs. 50% say, not so much. But a 50-50 bet with a 400% potential return is a really asymmetric return on the potential. So that's one that anyone can do. You can research it, take your time, feel comfortable because it's not a hurry up and get it on type of bet, but you can, do it today, next week, whatever. And you're pretty much going to retain somewhere between a 400 and a 500% ROI if all Tesla does is reach all-time highs in the next year and 3 months.
Thank you for that example, Nate. I think that's great. And I think if you want more examples specifically like this, these specific plays that you can do for trades to make every day, you can sign up for their daily scan +1 trade. Again, we have a QR code up for you now. I have the link in the comments here in just a second. But this is a way to get exactly that, right, Nate? You'll get a trade laid out just like that of where to buy at, what date, all of that, right?
Yeah, and if you join the opening playbook and closing playbook, not only will you get that, but you also get like full hour-long training on, okay, so you guys have never done a debit spread. Here's how it works. Here's why we structure trades this way. Here's how you do the entry. Here's how you do the exit, and actually walk you through in real time because Graham and I are trading our own live accounts every day in those opening and closing playbook sessions. And so, of course, a lot of our people are new. They've never traded the way that we trade, oftentimes using debit spreads and things like that. So if you're new and a lot of this is stuff that makes sense on some level, but you haven't actually done it in your own account, then obviously I recommend being in the live sessions because I think it's just a lot easier to pick up in real time when we're trading right in front of you. So yeah, I recommend that for anyone who's just trying to figure out, okay, how do I actually do this in my own account?
Yeah, I just pulled up the link here. We had a couple of people ask how to actually learn about this. I've got that link up again. These guys literally walk through the basics, especially you said that morning one. So if you join them at 10 a.m. Eastern, every day. They will walk through puts and calls and how to get started and really slow it down if this is a new thing for you. So I love having you guys on, really teaching well for what might be a new concept to some, or just some good ideas for people who are already doing this every day too. We're going to wrap up here in about 5 minutes, but before we do that, I want to get to a few of the specific names that some people in the chat are just asking you to look at right now, whether it's looking at as a long-term stock or if there's any different day trading plays that you would have on any of these stocks. The one I want to bring up because it's just a wild move right now. TC, thanks for joining us again, like you always do. We appreciate you. OCTO, it had a over 2,000% jump overnight, which is wild. So like in one day, it jumped 2,200%, I believe. And then if you look, it's already pulling back a little bit this morning. But have either of you heard about this one before?
I had not heard about it until I saw it in our channel where someone said, "Oh my gosh, look at OCTO." So I can't claim to have any real analysis because it just crossed my radar, because I think it ended up like 47,000% or something at some point from the peak. But Graham, I don't know if you have any more intel. I just saw it and thought, "Oh my goodness," but no actual trading related information other than wow.
Yeah, it's funny if you look at a chart like it looks like it IPO'd yesterday, because you can't even see the previous trade data barely because it's so minute compared to what that candle did yesterday. But me personally, if you were to buy this is like buying a lottery ticket. Could work, could go back down to where it started. I personally wouldn't put a large chunk into it unless you want to just have some fun on Octo.
Yeah, I think it's just fun to look at the chart when you see moves this big, but I think that's a good,
it's unbelievable.
Good description, Graham, that it's a little bit of a lottery ticket play for sure.
Yeah, this is where we need someone to invent a time machine so we can go back.
Yeah, and catch it before it happens. Agreed. Yeah. Completely. All right, we've got so many different names here. I'm just going to pick a few at random. Sorry if I don't get to the stock that you want covered today. One they want to talk about is Chewy. I'm not even sure what the ticker is, but if you want to look up Chewy as one of them. Another Oracle, let's just pick that. I mean, that's a name we've talked about plenty of times before. And then GameStop came up a couple of times. So I'm wondering if there might be some moves happening in GameStop. Have either of you ever done anything with GameStop?
Oh, I definitely did during the meme phase. I can't claim to have done that well on it. I don't think. I would have to go back and look at my P&Ls, but I was buying lottery tickets just with the rest of them just for fun to see what would happen. Now, Chewy is a name that I actually quite like. It's one of those ones that has had a whole bunch of short interest before and had kind of crazy volatility. But I actually think the underlying company is pretty solid on Chewy, and I think as we continue to get into a world where everything is online and they're just going to take up more and more market share. Like, I guess if you wanted to really simplify my analysis of Chewy, I would say I find it unlikely that less people will start buying dog food online. I find it extremely likely that more people will start buying dog food online. So I think, like, from a trend standpoint, that's about as basic as it gets. It never did come back and fill that earnings gap that it blew up early in the summer. And so I think that's a legitimate target for Chewy, like, $46 calls, or if you wanted to buy the underlying, that's over 10% on the underlying move. And so, yeah, I think Chewy is actually a pretty good one. One that, to our point, if we get a little bit of a melt up, some of those online companies that have, lots of retail volume could definitely see some bids. So, trading that at least up to that $46 gap from the last earnings bomb, I think would be a very reasonable play on Chewy. That's CHWY, by the way.
Yeah, and keep in mind, guys, they do have earnings in the morning, so this will move overnight. So if you ask, do stocks move overnight? Yes, this is one of them that's going to move. It's anticipated to move nearly 10% in either direction here for Chewy overnight.
Yeah, so it's been a big mover on earnings in the past, but I think I haven't looked at it all the way back. I don't know if you have, Graham. I think it, outside of that last one, has been a pretty consistent earnings beater for the last 2 years or so.
Yeah, I think so too. The only thing that concerns me for buying it today, and again, tomorrow we're all going to be armchair quarterbacks who will have called it perfectly. But the only thing that concerns me is we have seen a slowdown in consumer discretionary spending. Obviously, Chewy falls into that category because we're talking about buying things for your pets. Which all discretionary.
Graham, the chat's going to be very offended by you calling feeding your pets discretionary.
But the discretionary portion of spending with Chewy, they may see a revision downwards for the future projection. That would not shock me, which we saw that with like Lululemon the other day, taking a beating. But to Nate's point, if that does happen and tomorrow morning Chewy is down 10%, it could definitely be a good one to be buying for a discount. Now, that said, they could say that everything's great and people are buying more pets than ever, which I think is true. So
yeah, that whole sector is doing well. But I think what you said, we had a retail expert on Sunday. It's an interesting conversation too, a retail CEO. And he was talking about luxury goods, luxury items definitely getting a little bit of a hit right now. And so a lot of companies are trying to pivot. I think that Chewy could fall into that as maybe some non-essentials. The food essential, the extra dog
Gabe,
toys, maybe not.
Not so much not buying food. It's more so leaving the dog treats out of the shopping cart.
Yeah, that kind of thing. All right, let's get to GameStop. I just want to pull up that chart just because it looks like there's been some recent moves on it. I don't know if either of you have pulled it up recently. There's been some moves since mid-June, really. It kind of came down quite a bit. Do you see any catalysts happening there? Do you see any trades happening with GameStop? Anything you've heard of recently with this?
I haven't paid a ton of attention to it, but it's one that I would tell you right off the bat, I would probably look to trade it as a premium play on the earnings and just look for it to kind of underperform major expectations. Let's see. I haven't even looked at what the calls are going for. I'm sure they're overpriced as they tend to be. Only has about a 10% implied move. I say only, even though it's a big move because it's GameStop and sometimes they move 200%. But this would be another one where, like in Closing Playbook today, we might trade a premium play where we basically say, let's try to trade an expectation of under that $2.50 move. And anything less than that will make a 20 or a 30% ROI versus trying to guess direction. So for me, a lot of these stocks that have like a history of being very, very exciting and retail traders wanting to play, but have kind of smoothed out over time, I actually like to take that opposite approach and just expect something a little underwhelming on the move versus, overwhelming. We actually did that with NVIDIA, same kind of thing, except for NVIDIA, obviously a massive blue chip stock, GameStop, a meme stock, but same idea. Huge retail following, huge expectations. More often than not, you're just going to kind of underwhelm somewhere in the middle.
Good. All right, well, that's a good look at that one. I want to cover maybe 2 or 3 more names before we totally wrap up. Quick look at the charts, really. Zeta, I think ZETA is one that a couple people have asked about. I don't know if there's a lot of moves happening there or not. Is that a global? Let me look at the chart quick.
Looks like,
is that a financial? I don't know.
Cloud-driven or data-driven cloud.
Oh, it's one of your data companies. Well, Graham, you should probably like that one.
It will probably do well if we get this melt up. It's not the prettiest looking chart here for Zeta, but if we do get this AI melt, maybe this is one of those that we talked about. You'd love to buy it before news happens.
It looks like they've had mostly negative earnings. They had like one positive one, but it was back in February where they were expected to turn profitable and did, but didn't turn quite as profitable as they were supposed to and took another hit. So this could fall into the category, Bridget, that we talked about, where if you catch it and they do turn profitable and you have a company going from unprofitable to profitable in the next year, that could be a play there, but I don't know the fundamentals of it well enough or anything to actually speculate on if they're in position to do that.
One name that was brought up earlier was Oracle, which I actually really like. Oracle. It's ORCL. They have earnings today after the bell. We'll cover it in the Closing Playbook today at 3:30 p.m. I think this is a really exciting company. You should add it to your AI basket. Shame on me for leaving it out. Really good company. We saw someone this morning actually buy about $1 million of slightly in the money calls on Oracle going into earnings. So that's a very, very big order before earnings. Now, this one's expected to move about 8% overnight. It would not shock me if we see something similar to what we saw with AVGO the other day. If they get a real mega beat, that this one could be a really big popper for Oracle. This is definitely one I like over the next 12 months.
I think
right now they're at about 3-to-1 on the calls to put. Sorry, Bridget, about 3-to-1 on the calls to puts. So people are heavy on Oracle, expecting good things right now.
Yeah, that's a good comparison, Graham, to the AVGO. That was such a big move last week on a huge company that we talk about all the time. It's really like one of those well-established companies, and to see a move like that is huge. So it'd be interesting to see if Oracle follows suit. Another one that's coming up today that somebody mentioned in the chat, I'm just going to get to 2 more really quick. Rubrik, RBRK. This one reports earnings later today, that sounds like, based on the comment. And it looks like it's had a good pop before earnings, at least a little bit anyway. Have you heard of this company before?
No, I haven't, but this chart is unbelievable. of
Does look great.
whoever found this one. It's a great looking chart. I've never traded it. It looks like just from a technical standpoint, it was stuck for a while in that sideways zone there. I mean, still not quite to all-time highs, but trying to rip through there now. So probably looking for that earning catalyst to be the one. Let me just check the options on it real quick. That was RUBK, right?
RBRK.
RBRK. Okay, let's just see. Not a ton of huge orders on the option, so looks like that's mostly just underlying stock and retail buying. There's a couple medium-sized orders in there, so I don't think there's a ton of like massive insider action here on this one. I think it's probably just another one of those kind of smaller names that fall into the category of what we just talked about. Could turn a big earnings, could be profitable and get a little wild. But I think, to Graham's point, the oracles, the Chewies, like those are the ones that probably are more appealing to me than the total unknowns.
Yeah. Very last stock I want to get to today. I got one more to get to. This is one we've covered on the channel lots of times. It's AST Space Mobile, ASTS. We talk about it a lot just as a great idea, and we think that this company could do well in the future, but it's not doing so great right now. What are your thoughts on either playing options on this or looking at this as maybe a long-term growth play?
Do you want to take that one, Graham, or do you want me to take it?
I haven't traded this one in a while. ASTS. I typically don't like a chart that looks like a falling knife, which this one currently does. And that's just for the short term, for placing a bullish trade on it directionally. It does not look the most appetizing to me because it looks like it could fall to the 200-day moving average, which right now it's at $37. 200-day moving average is at $32. So I would not be shocked to see it go all the way to 32 before really gaining any sort of support there. But it could be a great one for the long term. Again, this is not one that I've looked at regularly or am invested in right now. So I can't really speak too much to it.
I think ASTS will have its time in the sun again. I don't think we're done with this stock. I think it's just a question of, how much did it get overhyped? How much is it going to be beaten down in the meantime? But I would put this in the category of it's pretty black and white. Like, you don't have to, in my opinion, guess on this one. You can wait for it to settle down. You can wait for it to pick momentum back up again. Let it do that on its own time, and then be a buyer when there's true momentum again on this chart versus trying to guess the bottom, because this is one of those tickers that should be a pure momentum asset. It should basically be, okay, when it finds that, when it gets that institutional volume, when insiders start picking up, when it gets some excitement behind it, that momentum is very, very clear on the chart, and you can be a buyer at that time and ride it. And if we get that melt up that Graham and I talked about, that's probably a good opportunity for it to do just that. But this is the exact kind of chart I wouldn't try to guess on. I would wait and let it be very obvious to me when people are excited about it again.
Really good look at a lot of different stocks. I wish we could get to all the names that everyone wants to talk about today, but I think if you want to hear more names and you want to hear more trades, you definitely want to join these guys live again today. They'll be live again at 3:30 Eastern today. We have the link up there for you to find their room if you want to go and join them. So you can join them at 3:30 today or tomorrow at 10 o'clock. And again, remind people of the differences between the two shows you do every day. What are you talking about in the morning versus in the afternoon?
In the morning, every day at 10 a.m., we'll typically do some sort of training. So we'll walk through exact trade strategies or maybe options training, very basic options training at a very slow rate, step by step. We record that. We give that out to everyone as well. And we always take trades pretty much every day. So we'll do that at the end of the morning sessions. We'll look for trades to apply what we just covered. And then at 3:30 p.m. Eastern, that's more of our fast-paced trading environment. If you're newer, you can come watch, pay attention. But there we're going to be ripping out trades that we're finding in real time before the markets close. Remember, the markets typically move overnight. During the day, they're normally pretty quiet. Overnight's where the moves are made. So we got to be flying around there on the ball for the last 30 minutes of the day to try and set ourselves up in the right position to play that overnight opportunity.
Well, another great show today, guys. Thank you so much for all your time. I kept you a little bit later today, so thanks for the extra time and going through these different stocks today. We so appreciate your time. Again, join them later today if you can, everyone. Thanks for joining us here on Trading Tuesdays from MarketBeat. We hope you'll join us again next week. As always, happy investing, everyone.